So what are the type of bond? Now you know the return of bond, what is bond, but what are the types of bond? Of course there are many types, but I only show you 3 types. First is Singapore government bonds. We call SGS bonds, Singapore Government Securities bonds. Corporate bonds. Corporate bond, there are 2 types. One is for institution and one is for retail. Today we will talk about retail bonds. The other one is bond ETF, exchange traded fund for bond. First one is Singapore government bonds. There are 2 types in Singapore government bonds. One is called treasury bills, the other one is called bonds. Treasury bill is when the maturity date is between 3 to 12 months. So if you invest in Singapore government treasury bill, you expect to get back your money within 1 year. But for bonds, Singapore government bond, you are investing in 2 years, 5 years, 10 years, 15 years, 30 years, or even 30 years. 30 years. Of course, if you invest in 30 years of the bond, you don't expect to hold 30 years, right? What if one day I need the money? How? Right? Cannot go to government, right? Cannot go Hong Lim Park, right? Cannot, right? So cannot. So how? You sell, but sell to who? How to sell? You sell in secondary trading in SGX. Bond ETF. If you are a beginner in bond or new to bond, ETF might be a good bond for you to invest in. This is my suggestion. Why? Because bond ETF hold a basket of bonds. Not only one bond, they hold many bonds. Objective is to track bond index. Just like SDI ETF, they track SDI index. Bond also will have index. Okay? Depending on what type of ETF, they may track different kind of index. Dividend distribution or coupon division is depend on ETF. Because they hold a basket of bonds. Some of these bonds distribute 1 per year, some distribute 4 a year. So what this ETF do is they lump all together and they decide whether they distribute to you quarterly or semi-annually. What are the benefits? What are the benefits? Wow. No benefit. Diversify into different rating of bonds. If you invest in Genting bond, you are hoping that Genting will not go bankrupt. Right? Invest in Olam bond, you hope Olam will not go bankrupt. But you invest in ETF, you are holding different kind of bond. They may hold company bond, they may hold government bond. So one bankrupt, you still have one more, right? Higher liquidity. That will answer your question. Why you should invest in ETF? Because you can trade in secondary market easily. Not like corporate bond, not like government bond. Difficult, low liquidity. Low management fee compared to those unit trusts. This one is nothing, 0. something% only. And no maturity date. This one important. No maturity date. Why? Because you are investing in ETF. ETF hold different type of bond. The bond may mature, but your ETF is not matured. Correct? The bond in this ETF matured, they just sell it and get the other one. So you are still holding this ETF. Correct? So you don't need to worry that you invest in this bond and when can I get my money back? You don't need to worry. Because when you want to get your money, just trade in the secondary market. Then you will get back your money. You can think this bond ETF is like index stock or index ETF. You can buy and sell through the SGX. Don't need to worry when this thing will mature. Okay? Correct. This is very important point.